What's up, everybody? Thank you for tuning in to another episode of the CPA Zone, the podcast where we discuss tax strategies and accounting tips for entrepreneurs and real estate investors. My name is Ryan Pulis, and our company, the Pulis Group, offers tax planning and advisory services for entrepreneurs like you. Whether it's bookkeeping, tax planning, or CFO services that you're looking for, we've got you covered.
What's up, everybody? Welcome back to another episode of the CPA Zone. I'm your host, Ryan Pulis, and today we're going to talk about two special classifications or tax categories, if you will, for real estate. So we have qualified improvement property and qualified real property, or QIP and QRP, QIP and QRP. Acronyms might sound a little goofy, but these are definitely good things to know. So let's start with qualified improvement property. I generally refer to this as QIP. So when you hear me say QIP, that's what I'm talking about, QIP. This one is often misunderstood, but it's a goldmine for investors who know how to use it. So what is it? QIP includes interior improvements made to non-residential buildings after the building was first placed in service. So this could be things like drywall, ceilings, flooring, lighting, non-load-bearing walls. So walls are okay as long as they're not load-bearing. Plumbing and electrical upgrades can also qualify. However, this category specifically excludes things like elevators, escalators, and structural changes to the internal framework. So think things like load-bearing walls or support beams. None of those will qualify. Basically, though, otherwise, if you're renovating the inside of a commercial property or non-residential building, QIP should be on your radar. QIP is eligible for bonus and Section 179 depreciation. So when it first came out, this category was created under the Tax Cuts and Jobs Act. It consolidated a handful of categories that were available before, so things like qualified restaurant property, qualified leasehold improvements. These things are all rolled up under the qualified improvement property. Well, when it first came out with the Tax Cuts and Jobs Act, it was meant to be 15-year property and eligible for bonus depreciation. However, there was an error in the drafting language, which defaulted it into the 39-year property bucket. Then during COVID and when the CARES Act passed during 2020, they fixed this issue, even allowed some accounting method changes to kind of go back and address the prior years. But they fixed it, and it is indeed 15-year property, which is eligible for bonus depreciation, also eligible under Section 179. So that's our qualified improvement property. Next, we have qualified real property, or QRP. So this, again, is also about improvements to non-residential property. It includes QIP. So QIP is a subcategory of QRP. And that's those internal improvements we just talked about. QRP also includes some specific building systems. So it's roofs, HVAC systems, fire protection systems, security systems are all considered QRP. So normally these upgrades would be slowly depreciated over 39 years, but with Section 179, you might be able to write off the entire cost in the same year you make the improvement. That's a game changer for many people. Just remember, it applies to improvements made after the building was placed in service. So if you're building from scratch, this is not going to work. Also, it's only for non-residential properties. So residential real estate does not qualify. So the same goes for QIP as well as QRP, in that it's non-residential properties only. And these are things that happen after the building was first placed in service. So a simple way to remember the difference between QRP and QIP is QRP is for its specific systems like HVAC, roofing, fire protection, and security systems, as well as QIP. QIP is a subset of QRP, but QIP is broader and deals with those general interior improvements. So QRP includes QIP, and it also has the systems HVAC, roofing, fire protection, and security. So there is a bit of overlap, but QIP does have one big advantage. It qualifies for bonus depreciation and Section 179. Where those QRP systems, the HVAC, roofing, fire protection, and security, only can use Section 179. So with QIP, if 100% bonus depreciation comes back, which looks likely, but nothing's set in stone yet, you could have a 100% write-off in year one, and it can help create a loss. Now, as things stand right now, we're in that phase down phase of 2025, currently 40% bonus, still not bad, but not as good as 100%. QRP qualifies for Section 179. This is the QRP, the building systems, HVAC, roofing, fire protection, and security, but not bonus. But Section 179 is great. It allows you to take a big write-off in year one. You could expense the whole amount. Like right now, as long as you have taxable business income, because there is a limit to Section 179 for taxable business income, cannot create a loss where bonus depreciation can. But if you have taxable income, Section 179 at this point in time could be more beneficial because you get to write off the full cost of Section 179 eligible property, where bonus is now 40%. So the Section 179, there is a cap. So for 2025, the limit is 1.25 million. So it'd be very large purchases here. And it begins to phase out once your total asset purchases exceed 3.13 million. So QRP for the building systems, that's again the HVAC, roofing, fire protection, and security systems, eligible for Section 179, but not bonus. While QIP, a subset of QRP, that the interior improvements to the building qualify for bonus depreciation or Section 179. So you want to kind of look at both, see what's going to most benefit you. So let's just run through a quick scenario. Let's say you buy an old commercial strip mall and decide to renovate. You spend $50,000 on a new HVAC during your renovation. That would be QRP. Another $100,000 on interior drywall, lighting, and flooring. That's QIP, qualified improvement property. $25,000 on a security system, QRP. Another $100,000 on let's call it a tenant build out, QIP. So almost all of that could be written off in year one if it qualifies. The QRP items would be expensed under Section 179. That's our security system and HVAC. The QIP items can use bonus depreciation or Section 179 if there's taxable income, which would lead to a massive deduction in year one, rather than spreading this stuff out over 39 years, which would typically be the case. So this is why investors who understand QRP and QIP are playing a whole different game than those who don't. So close to, I'd say about a third of the tax returns we review have some issues with depreciation. They might not be QRP or QIP, but constantly see things that are misclassified and not being used to the full advantage that would otherwise be allowed to the taxpayer. Now, just some quick planning tips when you're going this route, looking to QRP and QIP. So plan your renovations strategically, make tax smart upgrades, pay attention to what qualifies as QIP and QRP. Use cost seg studies. So these studies will break down your property into components that will identify the various assets that qualify. So if your initial building purchase has a cost seg study, it's going to break out all those components. So when you go to replace a new piece, a portion of the building that may qualify as QRP or QIP, not only do you get the deduction for the new renovations to QRP or QIP, but that cost seg study also allow you to use a partial asset disposition that we talked about on the show before, that allows you to write off the undepreciated portion of that component being replaced. So without a cost seg study, if you're not doing this, you're leaving money on the table, especially for the larger deals. Pay attention to your place in service dates, because both QIP and QRP require the building to be placed in service before the improvements are made. So renovations during the initial construction do not count. So timing is very important here. Watch for the bonus depreciation phase outs for QIP. So, we're phasing down. Last year was 60%, 40%. It does look like 100% is going to come back. Hopefully Congress comes to an agreement and passes a bill that will do just that. And then last but not least, work with a CPA and work with other professionals who know real estate. The rules are complex, and a mistake could cost you thousands of dollars. So make sure your advisor speaks your language, and keep listening to the CPA Zone. So that about does it for today. That's our discussion on QRP and QIP. Hopefully you found some value in this episode. If you learned something new or just really enjoy a good tax deduction, go ahead and subscribe and share this episode with someone you think can benefit from us. Until next time, have a great day. Are you interested in becoming a client? Click the discovery meeting link in the show notes to schedule a free call to discuss our services. So that about does it for this episode of the CPA Zone. Thanks for listening, and I hope you found something valuable that you can take away. We are taking on new clients, and if you'd like to work with us, then go to our website and fill out the client intake form on our contact page. This can be found at thepulisgroup.com/contact. That's THEPULICEGROUP.com/contact.